Most people think investing requires thousands of dollars sitting around, but that assumption is completely wrong today. You can start building real wealth with just $5 invested every single day, no excuses. $5 daily adds up to about $150 invested every single month, consistently. Hi, I'm Caleb, and welcome back to WealthCalmly, the channel where money stops feeling confusing and overwhelming. Today I'll show you exactly how $5 a day can quietly build real financial freedom for you. No jargon, no confusing charts, no stress, just simple steps that anyone can follow starting today. Let's start with the biggest myth stopping ordinary people from investing anything at all right now. The myth is simple. You need a lot of extra money before investing could ever make sense. That myth keeps millions of people stuck, waiting endlessly for some perfect moment that never actually arrives. The truth is the exact opposite. Starting small and starting early always beats waiting for extra money. $5 a day feels tiny, almost pointless, but time transforms tiny amounts into something genuinely powerful. This is called compound growth, and it's the quiet engine behind almost every wealthy person's success story. Compound growth simply means your invested money earns money, and then that new money earns even more. Imagine a small snowball rolling downhill, slowly picking up more snow with every single passing turn. At first it barely grows at all, but given enough time, that snowball becomes genuinely unstoppable. Your $5 a day works exactly the same way once it's inside a simple investment account. Invest $5 daily for 30 straight years, and history suggests it could grow into six figures. That's not magic at all. That's simply consistency combined with time quietly working in your favor. The earlier you start investing, the less total money you actually need to reach the same goal. Waiting even 5 extra years can cost you tens of thousands of dollars in lost future growth. So the best time to start was yesterday, and the second best time is right now, today. Now let's talk about exactly how you can actually start investing $5 every single day. First, you need a brokerage account, which is simply a legal place designed to hold investments. Popular beginner-friendly options include apps like Fidelity, Schwab, or SoFi, all of which are completely free. These apps let you invest tiny amounts, sometimes even fractional shares, with absolutely zero trading commissions. Opening an account usually takes about 10 quick minutes using just your phone and basic information. Once your account is officially open, you'll need to decide what you're actually going to buy. For total beginners, index funds are almost always the smartest, simplest, and safest starting point available. An index fund is basically a basket holding hundreds of companies inside one single simple investment. Instead of betting everything on one company, you're betting on the entire economy growing steadily over time. A popular example is an S&P 500 index fund, tracking America's 500 largest public companies. Historically, this particular index has returned about 10% annually, averaged out over many long decades. That means your $5 a day isn't gambling, it's simply participating in long-term economic growth. Once you've chosen your fund, set up something called automatic recurring investments right inside your app. This means $5 gets invested automatically every single day without you ever thinking about it. Automation removes emotion from investing, which is honestly the biggest advantage that most beginners overlook completely. You won't panic sell during scary market dips because you won't even be watching daily price changes. This simple strategy is called dollar cost averaging, and professional investors actually use this exact same approach. Dollar cost averaging simply means you buy consistently, regardless of whether prices are rising or falling today. Some days you'll buy high, some days you'll buy low, but it averages out beautifully over time. This approach removes the impossible pressure of trying to perfectly time the unpredictable stock market each week. Nobody, not even seasoned professionals, can consistently predict short-term market movements with any real accuracy whatsoever. Consistency always beats timing every single time, especially for beginners just starting their long investing journey. Now let's address the fear everyone feels. What happens if the market crashes right after investing? Markets do drop sometimes, occasionally quite dramatically, and that's actually a completely normal part of investing. But historically, every single market has always eventually recovered and reached brand new all-time highs afterward. If you're investing small amounts consistently, sudden market drops actually become quiet buying opportunities instead of disasters. You're simply buying shares on sale, which smart, long-term investors should genuinely welcome, rather than fear. The real danger isn't market crashes at all. It's never starting because you're afraid of them. Let's talk actual numbers, because seeing real concrete examples makes this whole concept feel far more believable. If you invest $5 daily starting at age 25, growing steadily at 10% annually, by age 65, that same account could realistically be worth well over $1 full million. That's the true power of starting early, even with an amount that feels almost completely insignificant. Start at age 35 instead, and that final number drops dramatically, sometimes by half or more. This isn't really about being wealthy today. It's about protecting your future self from real struggle. Now, here are some common mistakes beginners make that quietly sabotage this entire simple strategy completely. Mistake number 1 is stopping contributions the exact moment the market gets scary or unpredictable suddenly. Mistake number 2 is checking your account balance obsessively, which leads to emotional, panic-driven financial decisions. Mistake number 3 is chasing trendy hot stocks instead of sticking with boring, reliable index funds. Mistake number 4 is ignoring fees entirely, since high fees quietly eat away at your returns. Always check your fund's expense ratio, aiming for something well below 0.1% yearly. Mistake number 5 is forgetting to increase your contributions slightly whenever your income eventually starts growing. Even adding just $1 extra daily can meaningfully accelerate your entire long-term investment results over time. Let's briefly talk about tax-advantaged accounts, which can significantly boost your overall investing results over time. A Roth IRA lets your invested money grow completely tax-free for your entire future retirement years. If your employer offers any 401k match, contribute enough there first before investing elsewhere separately today. That employer match is essentially completely free money that you should never leave sitting unclaimed anywhere. Once you've captured any available match, redirect your $5 daily elsewhere if it's actually needed. Remember, this entire strategy works alongside your emergency fund, not instead of having one at all. Before investing aggressively, please make sure you have some cash saved for genuine emergencies first, always. A small emergency cushion prevents you from selling investments during unexpected, stressful financial situations later on. Once that safety net exists, your $5 daily can work uninterrupted for many upcoming decades. Let's recap everything simply, because real clarity matters far more than complexity when building lasting wealth. Open a brokerage account, choose a low-cost index fund, and automate $5 every single day. Let compound growth work quietly in the background while you simply focus on everyday life instead. Ignore market noise, ignore short-term drops, and trust the process that you've already carefully built here. Small, consistent actions repeated over many years always outperform occasional, dramatic, emotionally driven financial decisions made hastily. You don't need to be rich to start. You need to actually start to become wealthy. $5 a day is proof that literally anyone can build real financial security, patiently and steadily. To make this even easier, I built a simple $5 investing toolkit just for you. Inside, you'll find a step-by-step checklist, a simple daily tracker, and a beginner brokerage comparison guide. It's designed to walk you through opening your account and starting your very first investment today. This toolkit turns everything from today's video into one simple, printable guide you can actually use. You'll find the link to grab it in the description box and the pinned comment below. If this video helped you see investing differently, that's exactly why this WealthCalmly channel exists, honestly. Subscribe for more calm, practical money guidance designed specifically for everyday, hard-working Americans just like you. Share this video with someone who genuinely thinks they can't afford to start investing yet at all. Drop a comment below telling me your personal $5 investing goal, and let's stay accountable together. Remember, real wealth isn't built overnight, it's built quietly, one small decision at a time daily. Thanks so much for watching. Stay consistent, stay patient, and I'll see you in the very next video.